What sort of things are tax deductible or count as losses as crypto investors? How can we legally reduce our tax liabilities and avoid unnecessarily paying taxes? Hello, I'm Crypto Casey, and in this video we are going to explore tax deductions and how we can legally reduce the amount of taxes we pay as crypto investors with Lorenzo Abatiello, an expert and industry leader in cryptocurrency tax and crypto tax reporting. If you want to see more content like this where we interview professionals in the crypto world to help us on our own crypto journeys, let me know by liking this video, subscribing to my channel, and clicking the bell notification to stay up to date on all the latest content. This video is part 3 of our interview with Lorenzo, where we focus on reducing our tax liabilities, what counts as deductions, and what counts as losses, as well as things we should understand as investors and stay mindful of throughout the rest of the year while investing. Lorenzo is offering us a free 15-minute consultation with him about our crypto tax situations. So if you would like to redeem his offer, be sure to scroll down to use the link in the description area below or use the QR code displayed. Awesome. Let's explore crypto tax deductions with Lorenzo, a certified public accountant that can actually give us financial advice. All right, how about losses? So people have been asking if they were a victim of a rug pull or some kind of scam, does that count as a loss tax-wise?
It's kind of sad, but by technical law, you're not allowed to write off fraud. You're not allowed to write off a scam. That changed a few years ago. I think there's a few ways you can do this. Definitely the rug pulls. If you can sell a rug pull, or you can offset a rug pull and deduct it because it's technically a sale, because you are losing at a basis and you have like an asset in hand. So the rug pull is a little bit easier to just write off as a loss. Scams, I think that they need to do something about this, because the government wants to go in and be tight with crypto regarding, well, there's not protections we need to regulate this because there's not protections for investors. But at the same time, you want to go in and put all this energy out there that you need all these protections for investors, but they're not doing their job to say, okay, if you did fall into this, here's how we can help you. And that's where it's like shame on the government side, right? It's like if you do, and if you file and you have to do it right, file an FBI report, file like whatever. So now they could look into this. They could say, hey, this is what happened. Let me give you the information so we can go and actually research what the heck happened here. And if you did this, you're allowed to write it off. Like, that's what I would like to see. Because that makes sense. The world needs common sense right now. There's too much craziness going around to not have common sense on how to handle and have solutions to problems.
What about if people lost their private keys or some other user error occurred, resulting in a loss of their crypto? Does that have any effect on taxes?
There really isn't much guidance on that. I'm not going to sit here and make up an answer, because if you lost your money, you lost your money. I mean, it's kind
of like, hey, if you lost your wallet and there was some cash in there, yeah, that's on you.
There's always the classic ones. Like, I had it all these years ago, and I lost it. One of my boys was on a jet ski. He lost his phone, got wet on the jet ski and killed the phone. Now he had no private keys, and now it's worth like $2 million or whatever the number. Yeah.
All right. So what about tax loss harvesting?
Tax loss harvesting I think, is one of the best tax planning tools and the cheapest tax planning tool that one could do. And you need to stay on top of it. And by doing your homework, you get rewarded. And granted, I hope everyone makes money, but sometimes people don't make money. And if you didn't, then let's see what we can do. And tax loss harvesting is literally all on you. If you want to save money, put the effort in, see what you have, track everything right. At the end of the year, you can potentially wipe out your whole entire tax bill just with that one thing. I've seen it, I've done it, and I've saved people a lot of money just with tax loss harvesting. So I don't care what level you're at. You could have $1,000 in your account, $100,000 in your account, $100 million in your account. Tax loss harvesting is a 100% tool that you should be utilizing.
Can you walk us through an example or analogy of tax loss harvesting, the activity, what it involves?
Yeah. So why don't we just use what a lot of people did? A lot of people bought at the top recently. Not even institutions bought at the top. You know, big money got in at Bitcoin at like 55.
Yep.
A lot. I mean, Michael Saylor, he's very vocal about where he buys it at. He bought it at 56. Like, okay. So let's say you bought it at, let's just use easy numbers, you bought it at 60K. Now, we go down from 60K and now we're down to 30K. And we end the year that way. Let's now so now we're sitting at unrealized gains. We haven't sold anything, right? We haven't sold anything. Went from, you had 100K, you bought 100,000 worth of Bitcoin at 60,000. Now it's worth 50,000. It's sitting at 30K, right? We're following, but we haven't sold anything, so there's no taxable event. You also had another project that made 50,000 bucks. You blew it up. It was like you got into this gaming project, and now sick. You're happy you made 50,000 bucks. Nice. If you ended the year that way, you would owe taxes and capital gains of 50,000 bucks because you made it on that, but you didn't do anything with your Bitcoin, even though you lost money. However, if you sell, and then right now, currently, you can buy it right back, or you sell your Bitcoin and go into Ethereum, lock in that $50,000 loss. You can negate it against your gains and wipe out the whole entire gain that you made on that gaming coin that you did well on. Effectively owing zero taxes.
Yeah, so people should stay mindful of that throughout the year as they make gains and losses, especially as the end of the year comes around. You definitely want to assess your situation and do whatever you can to decrease those tax liabilities in a legal way.
That's why you also see a lot of volatility towards the end. It's one of
yep.
And not having wash sales, it's fuel to the fire with volatility for wash sales.
And if you need a cryptocurrency tax software solution so you can take advantage of tax loss harvesting this year, a simple and easy service you can use is CryptoTrader.tax. CryptoTrader.tax at the time of this video is still CryptoTrader.tax. However, they are rebranding soon to their new name, CoinLedger. So make sure you scroll down to the description area below to access the correct and official site, or feel free to use the QR code displayed on the screen, as we will keep these links up to date for you while they finish up their rebrand. One of the best aspects of their services is you don't have to pay anything up front. You can start instantly calculating your taxes without any obligations and without having to provide a credit card. So you can use their platform for free. You can import all of your transactions and see your complete gains and losses overview for free. And you only have to pay if you want to download or file your tax reports. Nice. Back to Lorenzo. All right, so let's talk more about deductions. Some people want to know, are transaction fees or gas fees tax deductible?
So tax deductions. Yeah, gas fees, well, a lot of times they are deductible, right? So they get taken out of, you can see they get taken out of your transactions when you put it through to a software. But gas fees, while they're big, I think people should really look at other ways to take deductions. And the tax code favors businesses. It favors people who want to produce revenue. So it favors people who have revenue producing activities. What's a revenue producing activity? You don't need a huge business for that. So yeah, you can deduct gas fees, you can deduct all that, but why don't you start deducting your lifestyle? Why don't you start deducting your education, your accounting fees, your meals, your travel to the crypto conference, your internet, your cell phone, your home office, your car. These are normal expenses in your life that you can go and start knocking down off of income. And that's where you have to start getting this mindset shift for some people to go from who've never had a business before. And it can save a lot of money doing so.
Got it. So if people want to be able to pretty much deduct their cell phone, their gas, all of these lifestyle expenses because they are in the crypto space, would they need to create a business entity in order to do that? Or is there a way that they can keep track of their expenses that the IRS is okay with when filing tax reports?
I would say there's a few ways you can handle this. You don't need a business entity just to start, right? So you don't need technically an LLC, a corporation, an S corp, a C corp. You don't need any of that. You could be a sole proprietor. Just file your taxes just like you had a 1099. So if I did some work for you and you 1099 me, and I had to file that on my return and I put it onto a Schedule C to take expenses, I'm considered a sole proprietor. So it's no different than that, right? You have your own little revenue producing activity and you're filing taxes for it. Now, a corporate setup is done for certain purposes. Now, yeah, you could handle things more legitimate, or you're looking for, asset protection on your company and your business, but let's say you have an Etsy shop and you're just like, selling stickers. What liability is there, right? Do you need all this protection? No, you don't. If you have partners and you're looking for, an operating agreement, it's a different story. But really, you can start as a sole proprietor. You go online, get an EIN number. You can even open up a bank account, a business bank account. So it's not necessary. You can get started without having a corporate structure.
All right, so legally reducing tax liabilities. We got side hustles, e-commerce businesses, mining, an aspect of borrowing. How about crypto IRAs? Do you have any interesting comments about that from a tax perspective? People who are interested in potentially investing, trading crypto within a crypto IRA?
Love the crypto IRA concept. It's you can deduct, you put $6,000 away into it. You can roll over into it, which is really strong. I think that's more of a powerful deduction. You can open up a SEP IRA. So for any business owner that's done well, you can take your profit and roll up to $56,000 into your SEP. Wow, it's huge, right? So it's a great planning tool. And now with checkbook IRAs, you can even have a little more flexibility into getting into a little more, I would say smaller projects. The iTrust capitals in the world are fantastic, and I would definitely recommend that as a starting point. If you want to get into a little bit more of, like smaller projects, you want to do it in a retirement fund, look into checkbook IRAs. It's another one, but huge tax planning tool. Definitely.
So if you would like to take advantage of a crypto IRA as a tax planning tool, check out iTrust Capital. Using their services, you can trade crypto tax-free within a tax-sheltered retirement account like a traditional or Roth IRA. I personally chose to invest my funds with iTrust Capital because they have the lowest transaction fees in the industry at 1%. Their monthly service fee is non-existent, 0, which is unheard of with retirement account services, both traditionally as well as with other crypto retirement service providers. And soon they are slated to become the first and only crypto retirement account service provider that supports DeFi functionality, allowing us to do cool things like accrue staking rewards, all tax-free or tax-deferred. Very neat stuff, so scroll down to the description area below to access iTrust Capital's correct and official site, or use the QR code on the screen, all while supporting the channel.
I was going to say one thing I'd like to note is you got to fund it with cash. A lot of people think you can fund it with crypto. You can't, right? You got to use cash. So that's a big limiting factor for a lot of people. But I also would be really keen to potentially rolling over dead 401ks into a crypto IRA. So if you worked at a job and you left and it's stuck there and you're like, oh, what do I do with this money? I had whatever amount in there. Look into rolling that over into a crypto IRA. Buy yourself a Bitcoin if you never have one. Right? That's what I did. I had a little bit of money sitting in an old job. When Bitcoin went down to like 28, this past little run, I got it at 30. I went and bought a Bitcoin. Like, screw it, why not? Buy Bitcoin.
All right, so you would probably be a big fan of this. One of the best ways we can legally reduce our tax liability is by consulting with and hiring a CPA. I think a lot of people maybe sleep on like, oh, I don't need a CPA, I don't need an accountant, I can just use this tax software and I'm fine. Can you just talk a little bit about the importance of just consulting with and having a CPA check out your stuff, or even just outright hiring them and letting them deal with it?
I'll be honest, I'm not the cheapest guy on the block, but I can almost guarantee every single person I work with saves more money than I charge. And that's just through tax planning. Not everyone needs it. I get it. Not everyone needs it, but it's really good to have someone that you can go to because you eventually will need it. So
Sure.
everyone goes through life events. And at that point, when you're going through life events, you're going to need a team of people that are going to help you with that, whether that's an attorney, an accountant, a CPA, a financial advisor. Those are really like the big three that you're going to need and roles when you go through certain life events. So whether you're, sort of successful in investing or not, everyone's probably going to buy a house at some point. Everyone's going to have a death in the family. Everyone's going to have get married or have a kid. Like, these are things that are going to happen. And it's good to have someone on the team to answer the questions that are going to arise when you go and get into these situations. So first and foremost, hiring a CPA. Actually, before I do that, I want to go over 2 questions that I recommend people ask before hiring any sort of professional. And when you hire and work with a professional, you want to work with someone who's worked with people similar to your situation. So you ask, have you had a client in a similar situation like me? And the second question you ask is, how have you helped them? What were the results? So if you are a real estate investor and you're buying a lot of houses, you want to work with someone who works with people who works in real estate. Like, it's just like common sense, like we said before. And then ask, what were the results? How can you help me? How can you save me money? How have you saved other people money? Really simple questions, right? And that should be enough to get the answer if it's worth it.
Sweet. So that was part 3 of our interview with Lorenzo, exploring crypto tax deductions, losses, and legally reducing our tax liabilities. If you missed part 1 where we explore tax reporting basics and the importance of filing an extension this year while we await further clarification from regulators, you can check it out now by clicking on the link above. In part 2, we cover how different crypto trading activities like using wrapped tokens, trading bots, and margin trading are taxed, which you can watch by clicking on the link above. And in the rest of our interview, we dive into more complex topics like gifting crypto, DeFi activity, staking, NFTs, and much, much more. So be sure to check it out. Remember that Lorenzo is kindly giving us the chance to have a free 15-minute consultation with him about our crypto tax situations. So please be sure to scroll down to the description area below to check it out, or use the QR code to redeem his offer. Awesome. Thank you so much for taking the time to watch this video. If you enjoyed the content, please make sure to like this video, subscribe to the channel, and click the bell notification to stay up to date on all of my latest videos. So what did you think of part 3 of our interview? Are you excited to start deducting your crypto lifestyle to reduce your tax liabilities? Are you going to check out iTrust Capital as another tax planning tool? Let me know in the comments below. Be safe out there.